you look at three or four of the deals that have been done, it's Australian, American. It's not just coming from the States. It's I must say, when the Australians started to do corporate deals again, it made me think of 2006 and 2007. But actually, when you look at what they've done, it's pretty sensible. So I think it's a trend that will continue. It's another way of getting access to a sector, and if you can buy into the right manager or buy the right manager and align them, the top management correctly, then you're buying into their expertise as well. So it's kind of a double bet.
And we've also seen that from even from China, actually. I mean, the deal we were involved in, Fosun invested in Resolution, and that's really the same premise, where you take a percentage of the underlying manager and then allocate capital to the underlying funds. So it is a model, and we're seeing the same thing also with Middle East money going into a fund manager at the moment.
So you're seeing that as a kind of ongoing trend?
As a model that works for certain types of investors who want to increase their exposure and presence in the market, yes. Yeah. And it works also for the fund manager, because obviously they then have a weight of capital behind them. There's an accelerated exit to the extent of the dilution.
Okay.
But I think just going back to the on the US, I mean, I think we're seeing lots of different types of US investors sort of coming in, not just the private equity funds, but the US REITs, and those focusing on the alternative asset classes. So we even seen situations where US mortgage REITs, to increase the income and their distribution capability, have gone into acquiring portfolios which are actually owning portfolios that are yielding distribution as part of their wider asset-related investment strategy. And then there's some of these new players like North Star, which again are sort of quasi-listed and funded by retail money, have very significant funds to allocate into Europe.